The U.S. inflation took a breather last month for the first time in about 8 months. While the increase was slower than in previous months, prices still jumped and remain close to record 40-year highs. Hyo-sun has more.
U.S. consumer prices rose at an annual pace of 8.3% in April, higher than economists expected. According to the U.S. Bureau of Labor Statistics, the Consumer Price Index, or CPI, a broad-based measure of prices for goods and services, moderated for the first time in 8 months. The rate cooled slightly compared to its peak of 8.5% seen in March. But it was still slightly higher than an 8.1% rise forecast by economists. It was also close to being at the highest level since the summer of 1982. Removing volatile food and energy prices, the so-called core CPI still rose 6.2%. To fight inflation, which has been the single biggest threat to post-pandemic recovery, the Federal Reserve has already pushed forward with 2 interest rate hikes and have pledged more until inflation comes down to the bank's 2% goal. The inflation reading is important given that this data largely determines the Federal Reserve's direction on raising interest rates. Against its backdrop, U.S. stocks retreated Wednesday, with the Dow Jones Industrial Average recording a drop for 5 consecutive days. Led by a sell-off in tech, the Nasdaq Composite ended the day down 3.2%, while the S&P 500 shed 1.6%. The benchmark 10-year Treasury note yield dropped from more than a 3-year high to below 3%. Hyo-sun, Arirang News.